Is this going to cause me problems financially? Is this going to be a benefit? Turned out to be a benefit. Boy, you don't know what you don't know until you get into the process. And that first time home buyer just doesn't realize how complex the process can be.
There's fewer loan officers that have been willing to play the long game in terms of getting involved in a consumer's financial life. As you're 6, 12 months away from buying your first home, you need to understand there is going to be this independent valuation that's done on the property. If you're a lender, if you're a loan officer, and right now your strategy is hope for lower rates, then your strategy is not a good one.
You need a voice. Appraisers need a voice with loan officers. Too often, we are totally disconnected, and there is a lot of room to connect and come as sort of one voice to the consumer. Episode 29 of Market Moves with Mark and Jeff. Jeff, excited to be here with you yet again. We have another exciting guest in front of us. Appraisers, which Jeff and I are, often see those originating loans as sort of this not to be talked to, and certainly a world that we don't understand well. And I'm curious as to how loan officers understand us one way or another. And we thought it would be really good to bring in a thought leader in the space, Brian View, who I have gotten to know through LinkedIn. Howdy, Brian. Welcome.
Hey, guys.
Well, I've gotten to know Brian through LinkedIn. He's a prolific poster and sort of content creator. I have come to know that he is the author of a book, and I will share that on the screen here just to give it a oh, there you go. I don't even need to do that. You rethink everything you know about being a next-gen loan officer. Brian, you also president and I think co-founder of FinLocker, which is a sort of a housing counseling app for consumers. Is that right?
It's in that space. I wouldn't call it housing counseling as a definition, but we certainly get into that. We're really an education, engagement, and nurture platform for lenders and loan officers to use for early journey first-time home buyers, which I'm really excited about this conversation because there's I think a lot we can all learn together to better serve that first-time home buyer.
Yeah, absolutely. And I'm reading, Brian, that there is a real focus with FinLocker serving kind of the lending community, but in helping the lending community ultimately serve that potential first-time home buyer. How do you guys think about, through FinLocker, the service that it provides to your client, who then ultimately is serving the consumer? Why do those things matter? Like, what are some of the values that it can bring in helping somebody get into a home for the first time?
Yeah, I'll start with, like, traditionally, the loan officer in the purchase space anyway, waited. I always say this, waited for someone to raise their hand and say, I'm ready. And that oftentimes came and still oftentimes comes through the form of an introduction or a referral from a real estate agent, right? And so if you look at some of the stats that are out there, I think National Association of Realtors, maybe Redfin validated this, but in Q4, the average age of a first-time homebuyer crept up to 38. So if we believe that that's the number, and there's no reason not to believe it, I look at it as we have 10 years of pent-up demand that's kind of, this bubble has been building consumers that typically are of an age that would either be in the process of buying a home or have already bought a home, right? And so there's more people that want to own homes for the first time than ever that haven't been able to for a variety of reasons. Affordability because of rates. Inventory is probably just still the single biggest impediment. And so can we help some of those people get ready faster instead of waiting for them to go to a realtor when they're ready to buy? Lenders and loan officers proactively go up funnel and start to actively engage, educate, and nurture this cohort of first-time home buyers in a meaningful way, and perhaps accelerate their readiness by 6, 12, 18 months, right? So that's a lot of what's in this book, is this idea that we do need to, as a loan officer community, we do need to rethink everything. I believe that the modern mortgage loan officer is a hybrid loan officer, meaning they still service and serve realtors and their referrals from realtors, but they also are going to build and leverage their own personal brand in their local communities. That local community could be physical and digital. and become the most trusted resource for financial literacy, financial education, and preparation as it relates to home ownership.
So it's kind of zooming out from just, hey, I want to buy a home to how do I get my finances in order more quickly and have that consultant in place, well ahead of the decision to actually make the purchase.
Yeah, another thing that I would say to think about is that typically that first time home buyer, especially those at the younger end of that cohort, haven't amassed enough assets to have a personal banker or maybe even a financial advisor. And so as we think about that segment, who best to play the role of the quasi financial advisor as it relates to acquiring likely the largest asset of that person's life and then the corresponding largest liability, then a loan officer that leads with education.
I'm struck at the contrast, Brian. Appraisers are generally kind of the heady bunch that almost never have to get into sales the way our business works. You get an appraisal license, and you hang the tile, and work starts coming.
Right.
In your world, that is such a different space, and I think entrepreneurial appraisers dream of a world where they can serve direct to consumer, and especially in this world where like Fannie and Freddie, like appraisal waivers, and maybe they don't want what we do as much, but a consumer probably ought to. How do we reach those people? And it's just fascinating to me that your whole business is around that and thinking of new ways in this modern world of how to do that. It's largely the reason for our podcast is just trying to develop content and reach people in different ways.
Right. Yeah, and I would think from the seat of a loan officer, loan originator, and then the same seat of over here of an appraiser, we're all trying to serve the same end consumer, that home buyer. And in my world, it's really the first time home buyer. And the first time home buyer they need more help than any other cohort of home buyers. In prepping for this call, it came to me that all I think about and talk about is the consumer's financial readiness. But I also, at the same time talking, I already said it on this podcast, I talk about the fact that they're about to acquire their largest asset. And honestly, that asset, the value of that asset is really important in all kinds of ways, not just for the lender who's going to, put that mortgage on it, but it's important for that acquirer of that asset. As I think about my own first time home buying experience, I really had no way to understand the value of this asset I was acquiring prior to acquiring it. And so I just wonder, there's definitely some learnings I think that we from an origination side of the business can take from the appraiser community and help educate our prospective home buyers on what goes into that valuation. But I also think that based on this conversation, there's a lot that appraisers can maybe learn and understand and have empathy for the role that the modern loan officer really plays in this ecosystem.
Boy, absolutely. And you trigger a memory for me on buying our first home. My wife and I had we started the process before we were even finished with the wedding, and we had some stupid addendum to the contract or something. Our loan officer literally showed up to our wedding reception, like 2 days after we were married, to sign this thing so that the home was like we could close and be ready to move in when we got there. And it brings back fond memories because we didn't know what we were doing, and we were a little bit worried about, man, are we paying too much? Not necessarily from a value perspective, but from a financial literacy and preparedness perspective. And it turned out to have been a wonderful decision. We're really glad that we did it. But what we didn't have was this guidance, that you're talking about, of understanding, like, is this going to cause me problems financially? Is this going to be a benefit? Turned out to be a benefit. Glad that we did it. But boy, you don't know what you don't know until you get into the process. And that first time home buyer just doesn't realize how complex the process can be.
Right.
Absolutely.
Right. What are so in Misery Loves Company here, we're in a pretty tough down cycle. What is the general loan originator's experience these days over the last 12 to 18 months? What's driving them right now? What are they looking to do?
Yeah, so I'll start with kind of the macro kind of view, which is how many of them exist, right? I'm not an originator today. I really serve originators and the lenders that they work for. Now, there's all kinds of stats floating around. The best one I've seen is that as of January 1st, 95,000 loan officers renewed their NMLS, certification license, whatever you want to call it, right? So they, as of Jan 1, they had to do that in the system, renew. And this 95,000 was measured as loan officers that originated at least one loan in all of 2024. And then there's like tranches. It's a little scary when you start to look at those loan officers that, did at least 6 loans a month in 2024. That 95,000 gets quickly down to like 15, 16, 18,000, something like that. So anyway, if you go back a couple of years, that 95,000 population using that same one loan in the calendar year metric was somewhere around 200 plus thousand. And so we've seen a lot of people that had elected not to renew. And I think there's more coming. I think there's going to be some further consolidation. It's hard. It's tough. This is one of those things where, again, I talk about how I believe that role is the most critical role for first-time home buyers in terms of just getting them prepared for a responsible transaction. Those loan officers they eat what they kill. They're 100% commissioned salespeople, right? And so unless they're killing something today, they're not eating tomorrow. And so what this has resulted in is fewer loan officers, in my opinion. There's no stats. There's fewer loan officers that have been willing to play the long game in terms of getting involved in a consumer's financial life 6, 12, 18 months up the funnel, because they're so focused on, I got to close something today to eat tomorrow. And what we're really trying to do with our technology at FinLocker, and what I try to do, hopefully it comes through on my content on LinkedIn, is, you need to have this balance as a loan officer of today's business that's going to feed my family today and tomorrow, but also maybe it's 30, 40% of my energy focused on nurturing this long tail pipeline of tomorrow's home buyers, right? And so I think that nurture, that the value that the loan officer can bring is in the form of education and preparation. And so tying it into our conversation, I think part of that talk track, as loan officers are educating consumers, needs to involve more on the asset itself and how that asset is valued. Not a particular address, but as you're 6, 12 months away from buying your first home, you need to understand there is going to be this independent valuation that's done on the property. That asset valuation is done on behalf of and to the benefit of a lender. However, it is also going to benefit you as a consumer, because the whole idea is that lender is going to make sure that they're protected, but by extension, they're also protecting you as a consumer. And I think we got to figure out how to help loan officers have that talk track more naturally, because I'm not sure I'm doing a good job of it here. That's where I think in communities, appraisers and loan officers can kind of, link arms and start to do that education together.
It is our hope. And we have appraisers have been through the ringer with this like PAVE initiative and bias. And I'm sure you've seen headlines on all of this. And a lot of it is an uneducated public, not aware, for instance, that two different appraisers could come to a different value on the same property professionally. That's fairly common, frankly. And so this is a reason for that. So the education is so important to us as a community. So interesting opportunities there. So Brian, with the thought towards the future, there is also the survival of the moment that I'm sure the loan originators are going through right now. And I saw a headline that 70% of realtors didn't do a deal last year. I don't know if that's trust the source. I don't know, but man, we've experienced something, that headline on a relative level would apply to appraisers as well. And it's been told to me that, man, loan officers really don't want to hear about adding new appraisers to a preferred panel or anything like that these days. I mean, they're trying to find realtors themselves to get the next deal and that sort of thing. What is it like right now?
Yeah, so I'll say for sure on that realtor statistic, right? I mean, it's that particular side of the business has always had this kind of shadow population of realtors that, only have their license for their own transactions, or maybe they're going to help, their niece, nephew once in a while. And so I think that big population is they're they're probably less likely to stay in it, and they're not really driving any scale in the industry. On the topic or question or comment around, adding more appraisers to a panel. I sat on that lender seat for a long time, and you never know when the market is going to heat up and all of a sudden there's going to be more transactions. And I'd rather be in a position where I have a wider panel at all times versus having to scale that up to catch up with the market. We saw how that happened during COVID, and it just was never a good thing to try to ramp up when everybody else is trying to ramp up as well. So I always encourage people to, for all of their partners in this ecosystem, have that thing scaled responsibly and reasonably at all times, so that if the market gives you opportunity, you're in a position to take advantage of it.
It sure makes a lot of sense. Yeah, I mean, obviously, as somebody who provides the appraisal services, you'd like to hear that. But I think just strategically, it definitely is wise. And that was one of the things that we saw as a real pain point, especially in the ultra low interest rate environment during COVID. Fannie and Freddie have put out stats, saying our volumes went up here. Freddie actually has a chart that illustrates like appraiser capacity at that time. And when, side of the aisle is waiting for weeks at a time to get an appraisal done just so that the transaction go through, that's not, that's not a good place for anybody to be. I do wonder, Brian, as we talk about that, what's your perspective on kind of the relationship that the lending community has with the appraisers in terms of an ability to control a panel? I know that it sometimes depends on the channel or the avenue in which the loan is being originated, but what's your perspective on the current relationship with those originating the loans and those doing the appraisals?
So, I think we're far enough removed from like all the regulatory changes that drove, I wouldn't say the creation, because AMC's always existed. I remember back in the late 90s, there was, appraisal management companies, right? But they really became significant in the market when all the regulatory changes came in, right? I think we're far enough removed from that point in time. Again, my past life, most recently, I was at Flagstar Bank. We had both a panel that we managed internally, and then we also leveraged third-party appraisal management companies, for capacity and maybe for some unique channels. And so if I was a independent mortgage banker today, I would probably take the same approach. I probably would have a panel that I manage, but also have some relationships for capacity reasons, just to be ready when the market dictates. I think the idea of a panel at the independent mortgage banker level has all kinds of appealing. It has a lot of appeal. It does help when that IMB, that mortgage banker, is trying to recruit loan officers to be able to say, we manage our process. We're not, reliant on a third party. So there's definitely that value prop from a recruiting and retention perspective with originators. There can definitely be advantages from a service level perspective because you kind of manage your own expectations around that. But again, I think, our business has evolved so much that it's no different, in my opinion, than how lenders think about managing underwriting capacity and loan processing capacity. You have your FTEs, your staff that manages your capacity at this level. And then the smart companies build in the ability to flex capacity when needed with some third-party relationships.
That makes a lot of sense, and just a practical way to be able to react in an expanding market environment. So many questions. I could probably ask you a million different things. I'm curious about your response to this perspective. I've heard it explained in the past that one of the ways that an appraisal can help or hinder the loan, and this is assuming that the appraisal is done well and independently. I mean, appraisers always get a little bit worried when they're saying, well, I can't just have a loan officer telling me what the value should be. We have to respect that. But assuming that, I've heard it described by some in the lending space that a faster and well supported, but a faster turn time on an appraisal can actually help the borrower get committed to that loan officer. It can improve a pull-through rate and a close rate. Is that what you've observed, and how significant might that impact be?
It is extremely significant, in my opinion. And the appraisal part of the transaction is one part of that total turn time, right? And so, yeah, I mean, look at we're all walking around with this high powered computer. And the longer a prospective borrower is in this not yet closed / fully committed state, they're a click away from being able to shop every day. They're right now, frankly, when, credit gets pulled by a lender on a borrower, the world knows because the credit bureaus make that they had it available for people to acquire, purchase, and then you have other mortgage companies now that know someone's in the process because they're reacting to these credit triggers. And so anything we do as an industry and in every facet of the loan manufacturing process that takes 30 days down to 15, down to 12, down to 10, down to 7, improves exponentially the pull through for the lender loan officer. And frankly, I think it's the faster a consumer gets certainty around the whole transaction, the better they're going to feel, right? This is like we talked about in the onset, for a lot of people, this is the first big financial decision transaction they're making in their life. And the faster we can help kind of take the stress, the anxiety off the consumer, the better they're going to feel about this transaction after they own the property, right? So I think all those things line up to not only help the lender loan officer, that's their financial benefit, but I do think we are helping the consumer emotionally, getting them to certainty much faster.
It feels, Brian, that like the next generation or modernization, wherever that is, convenience and is always equated with speed, and everything is just needing to get faster, and certainty is definitely a benefit to all of that. So really, really interesting. There, I gather on some level. In fact, I talked to a loan officer not long ago that was in his particular world. Man, I haven't thought about the appraisal in a long time. I think he's got a smooth process going, whatever that is. Where, in your opinion, where are appraisers in the sort of mind space of loan originators, and where can we help?
Yeah, I was thinking about where we can help before you even asked that question, like early on. And this is something that I encourage and coach on with loan officers. I kind of hinted to this a little bit where I talk about that loan officer being that best source of financial literacy education preparation in their local and digital communities. And one of the things that I encourage loan officers to think about is to have their own podcast like we're doing today in their communities, right? And what better way to learn? I mean, I'm learning a ton talking to you guys here. What better way to learn as a loan officer to have a local appraiser join for a 20, 30-minute discussion on what they do, what is an appraisal, how does the valuation come about, I'm not talking about like all the math, but just pointing that podcast to that local community where hopefully realtors and consumers alike are consuming that information. And so I think there's ways to, lock arms in the community for originators and appraisers. This is not, there's no quid pro quo. This is not about, come on my podcast, I'm going to place all these orders with you. And that, we're not talking about any of that. This is like true partnership, but partnering on educating. And then we all earn what we earn in terms of the business that comes our way.
Boy, Brian, I want to, I know we don't have a ton more time, and I wanted to touch on this because you are such a prolific poster, and, you've got a large following that I've seen. And we have real estate professionals from appraisers, certainly, but all walks that, you had written a post of maybe an anniversary of being on LinkedIn and kind of where you had started with that. But I'd like to hear a little bit. I think the hardest thing about starting any sort of posting or content or social media or what you're talking about, it's that start, because you put something together and it's pretty embarrassing that one person watches for 5 months. What's been your trajectory?
So the first thing I'll address is that point, right? That's usually what holds people back from starting, is the fear of the embarrassment of only one person seeing or being perceived as, that wasn't very smart. Get over that, right? Because frankly, nobody cares. And you have to almost have the mindset that nobody's going to watch. Why would they, until I prove myself? And so it took a while to get there for me. I mean, I probably have, 8 to 9 of my pieces of content that I would call stuck versus, 1 out of 10 that's decent. But I think what I would be talking about in the context of an appraisal, like why would an appraiser start to put content out there? I think anybody, forget the role you have anywhere in any industry, we all have something that we're expert on, something that we have passion for. And in most cases, that combination of expertise and passion could be beneficial to somebody else. And even if it's only one person in 6 months that gets benefit from it, why wouldn't you share? And so, I mean, if I was a, local, passionate, you know, well-versed appraiser, I would start creating content on, what I do, why it matters, how I look at the market. I mean, I think there's enough people that would be interested in that where an appraiser could build a following. We're not gonna appeal to the masses, just like this podcast is not gonna appeal to the masses, but I think it's gonna appeal to your target audience. And I know when I do my content, I try to create it in a manner that's appealing to my target audience, which tends to be loan originators. So I think the key that helped me really get very comfortable on this platform is that I know who I'm talking to, and I'm confident in what I know, and I believe that I have some level of expertise that is valuable to share. And so as long as you have those three things, I think you just put it out there. And if one person sees it, it's your great aunt, so be it. She's going to be smarter for it.
Such wise, I think, advice there, because it is that fear or kind of that failure to launch that can make or break, do most things. And Mark and I have certainly felt some of the humble beginnings. We hope that what we do becomes, valuable to somebody at some point. But the passion and the excitement about, real estate generally, I mean, there's so many different angles, is certainly not lacking. And so, we are grateful to be able to have conversations like this with people like you that bring, I think, a very valuable perspective to how do these loans get done and originated, in the first place. You've mentioned a time or two, Brian, and curious about if you have perspective on, we talked a little bit about the current state of affairs and just surviving and the retracting numbers. We've seen something similar, though not quite to the same levels of retracting number of appraisers. That's kind of been an ongoing trend that I think will probably continue for a while for multiple reasons. But what are your thoughts about what the future might hold, through 2025 and maybe beyond in terms of rates? Is there pent up demand? Always hard to look into the crystal ball. Everybody thinks the appraiser knows value, therefore they must know the future. And I can tell you from sad personal experience, that's not true, but love your perspective on what you anticipate.
Yeah, I'll use I just came from a mortgage banking conference, and the Mortgage Bankers Association of America hosted it. And so from a market/rate perspective, the headline is higher for longer. If you're a lender, if you're a loan officer, and right now your strategy is hope for lower rates, then you're probably not your strategy is not a good one. So the expectation is, higher for longer, probably whatever the range that we're kind of trading in right now, the high sixes, sometimes touching 7. That's probably our, the range of rates that we're going to see for the foreseeable future. I think we just had the Fed talk about, no cuts today. And frankly, they've kind of said maybe there won't be cuts until, they see, inflation and perhaps employment kind of steady out. So I think, the lenders and loan officers that we engage with kind of have that mindset, that expectation. They're not factoring in some windfall, a refinance boom that's going to come anytime soon. And so how do I best serve consumers knowing that this is the market we're in, and just level set around that?
Brian, I do see, I wonder your perspective on this, but it feels like there have been a tremendous amount of fence sitters that are certainly not in the refi space, but in the purchase space, and uncertainty. I think even the Fed sort of forecasting further rate drops in a month or in another month, and I mean, it just create. And what seems to happen is what seems to be happening to me is that the initial rate shock, and there's beginning to be some uncertainty with an administration change and all. Do you think that we may see a little bit of a rebound in the purchase over the next 12 months because of those things?
I do. I think the, you guys probably hear the same thing, this lock-in effect of current homeowners who, like myself, have a mortgage with a 2 handle or a 3 handle or even a 4 handle. There's that lock-in effect. But at some point, I mean, we're pushing on getting on 3 years of this lock-in effect. In 12 months, let alone 36 months, life happens to people, right? There's what the 3, 4, 5 Ds that result in, people making decisions to buy and sell real estate: death, diapers, divorce. I don't know. There's a debt consolidation, right? So all these things that happen, which are life events that, even if you're sitting with a 2, 3, 4%, something like that note rate on your current mortgage, those life events are still coming at you. And so I think we're starting to see, a normalized market for home sales and purchases just based on life events that is unlocking some of that lock-in effect. But we can't ignore the fact that there are consumers that, absent the fact that they have, a 3 or a 4% current mortgage, would probably likely do something in the form of maybe, moving south if they're older in life, or downsizing their home, some combination of those things, that still holding back some segment of home sellers. But I think on the buy side, I do think there's more of a reality around where rates are. And I think the lending community, loan officers, do a good job of educating those fence sitters that just because you buy today and your rate is 6 3/4 doesn't mean that's your lifetime mortgage rate on that property. If you buy today and you start to get in the real estate space and enjoy some of the appreciation that has been happening, then that appreciation is going to offset some of the savings that you might otherwise get if you had a 5.5 versus 6.5 note rate. And refinancing a mortgage is infinitely easier today than it's ever been. And so there's always that financial transaction to lower your rate if the market gives you that opportunity.
Beautiful. I have one more question before we need to let you go, Brian. In our world, appraisal waivers are kind of a big deal. I don't know if this makes it into your universe in where you serve the marketplace, but I just, to the extent you could provide perspective of how you see waivers in the process, in the perspective of those trying to get deals closed on waivers. Are they a good thing? Or are they, do they come in lower? That sort of deal.
Yeah, I think it's a great question. And I always try to take all these things, and because there's an opinion from the lending loan officer side, right? And no one's going to be surprised that from their seat, waivers are great, right? Because that's creates that speed and certainty. From the consumer's seat, oftentimes that waiver is presented as value in the forms of speed and savings. And now you don't have to spend $600, $700, whatever the cost of an appraisal is. I think the gap, though, is in, would I benefit as a consumer if I actually had an appraisal done on a property versus a waiver? So this is where I think the appraiser, loan officer community getting together to have these conversations to better understand both perspectives and then be able to convey the real value to the consumer is important. Look at, we're going to rely more and more on data in the entire loan manufacturing process, and automation and analysis of data. I kind of think, in my mind, in a perfect world, you kind of would combine the data, the analytics, with the expertise of an appraiser from a physical perspective. So it's one thing to take the analytics and the data, and it's another to put eyes on an asset and then combine the two. And I think that's what, like, the ultimate solution would be, some kind of combination of digitization and, the physical inspection, if you will, that validates. They all actually validate each other in that sense. I know if I was buying a home today, I would probably not be comfortable just relying on the waiver itself. I would want a professional to put eyes, in the eyes meaning they're in the asset, walking the asset, inspecting the asset, and then attaching the value based on that physical inspection. One guy had it there.
Yeah. Well, we had an interesting conversation with a leader at Freddie Mac who brought to our attention that there were, even in cases where waivers are offered, they had a large percentage where they weren't actually taken. They still went forward with the appraisal for some of the reasons I think that you're articulating there. Yeah. And two, as you talk, it brings to mind that I think there are creative ways that appraisers can operate, kind of like what you're doing in serving the lending community, helping them be more effective and efficient. I think there are creative things appraisers can do direct to the consumer to help them. Even if they are offered a waiver, they decide to take it, but they still want that peace of mind of, I've still had a professional offer an opinion. And in most purchase transactions, you do have an appraisal contingency as part of the due diligence. And if a waiver is offered, then there's no appraisal to be one of the protections of, for the consumer. But appraisers can be offering that type of a service in creative ways directly to the consumer or, with the lender partner.
Yeah, I mean, if I was a local appraiser today, I would create a podcast, whether it's every week or once a month, whatever the cadence of episodes is. I would have some of my content geared towards the real estate professional community, both agents and loan officers. And in that context, I would do a case study, every third episode where I take a property that I recently did and just break it down for 20 minutes on a podcast. And then I would take maybe a third of my content and point it to the consumers at large and teach them what they don't know about this role in the manufacturing process. I think there's some good content that could be created there.
Brian, you have been very gracious with your time. We have kept you longer than you had. Thank you for tolerating us there. I'm really grateful to do this, and I hope it's a beginning of some collaboration.
Sure.
We'd love to work with you some more.
I enjoyed it, guys. Thank you so much.
Thank you.
Thank you for being on, Brian, and until next time.
Well, that was a great chat with Brian. Jeff, I kind of wanted to have a little bit of conversation, building on that conversation as Brian had a hard stop and to head out. But it struck me, a couple of things struck to me as important for appraisers, me being one of them, and I dovetailed this with our interview with Mark Calabria on episode 28. And hey, is there a life for appraisers beyond being an unnecessary friction in the process long term? And his response was, well, you need a voice in DC. You need a voice to make that case because there is one to be made. And I hear the same thing, or I think about the same thing with the loan officer community here where we serve. And I think he's saying that, hey, we need a voice. Appraisers need a voice with loan officers. Too often we are totally disconnected, and there is a lot of room to connect and come as sort of one voice to the consumer out there to meet them being knowledgeable in their acquisition of the largest asset likely that they will acquire.
Yeah, definitely, Mark. A couple of things that he shared and even his overall perspective were very consistent with experiences that I've had with interactions with loan officer friends and such. One is they're people. They're good at interacting with people, and it's what they do. It's a sales job, quite literally, in addition to the financial coaching and literacy that are aspects of that. They're always, Brian's perspective and about any loan officer that I know has a certain kind of self-awareness of what they do know about the appraisal process and just the valuation of an asset and what they don't know or understand well. And I heard him talking about kind of the need to try to educate their potential buyer as best they can on what this valuation process is, how it works, what to expect. But I definitely have heard him also saying that there's a lot of room for appraisers to partner with loan officers in providing, whether it's podcast content. The thought that came to my mind is that an appraiser could do a brief recording that a loan officer partner could share with people, just explaining at a high level what an appraisal is, how does it work. I think there's an acknowledgement by most in the lending community that they read appraisals, they have a sense of what goes into them, but they don't understand deeply that process. And then, their end buyer, much less so, understanding what the appraisal means and the valuation process. And definitely an opportunity, I think, for there to improve the communication and the collaboration between those originating the loans, those doing the appraisals that help facilitate the process. And his perspective was very consistent with what I've always, has been my experience, is they try to explain to somebody else what an appraisal is.
He co-authored the book, rethinking kind of how the next generation loan officer or originator looks. And yeah, I think largely this podcast is a little bit of exploring what the next generation of the real estate professional and specifically the appraiser looks like. And, I think it is more relationship driven, and those seeking your opinion who aren't the traditional seekers of your opinion. The appraisal waiver is a great example of maybe a little less demand in a certain area that we're most familiar with. Not everybody is a social media content provider one way or another, but a lot of people are good with the one-on-one handshake conversations and in creating those connections in your local community. There's a lot of room for that. And I think there probably needs to be that for the next generation. Right?
Yeah, absolutely. It's easy for those of us that don't have to interact with the clients every time you get work coming in to get a little complacent or not as being as effective in generating those relationships. And I think you brought up a good point even on the podcast, Mark, that there's an opportunity to go direct to consumer from the appraiser, and appraisers are oftentimes conditioned to say, hey, I've got to be an independent party in the process, which is absolutely true. And of course they do, but that doesn't mean that they can't provide an independent perspective directly to a consumer who might be making a decision, even if that consumer happens to have an appraisal waiver, or perhaps is even paying cash for a property, but they want that opinion that they value. And Brian talked about value, and he said he would want an appraisal even if he got a waiver on a purchase that he was going to do personally. I think a lot of people would value that comfort or that additional perspective that the appraiser can bring, even if it's direct to consumer, as opposed to only ever going through the lending.
Next generation in any space over the last several decades has meant improved convenience and speed. Appraisal speed is really important to the end user of our services, and I think appraisers would do well to remember that. Jeff, I think I've got to go throw my computer in the trash. I clearly have some RAM problems that are exposing themselves here, so let me do that, and let's close out. Big thanks to our guest, Brian, for coming on the pod here, and till next time.
Next time, a new computer.